Out of more than 5,000 stocks listed out there, how to find the best performing one? I'll help you choose them in less than 2 minutes. There are some big companies which have given negative returns in the last 4 or 5 years. What should be done? Invest and forget strategy doesn't hold good in every situation. So what's the solution? What is your opinion about two-step factor of stock selection? This is what we are going to discuss in detail in this second video of Stock Market Super Series. So watch till the end. Hi, hello, welcome to the show. I am Abhishek Ramappa. In the previous video of Stock Market Super Series, we discussed about PE ratio, how to distinguish between overvalued stock and a undervalued stock. But there is a question, there are so many stocks out there. Which bunch of stocks should I analyze? Should I consider to analyze for? How to choose those? That's the thing we are discussing in this video. When to enter a stock and how to decide it. So, which company to study? There are more than 5,000 plus companies listed on stock market. Out of these 5,000 and odd stocks, I will help you to choose a bunch of stock which are best performing or fundamentally strong stocks in less than 2 minutes. Let's do it practically. Open your phone, open Ticker Tape app. In the bottom right, you get an option called More. Click on it. Select Stock Screener from Tools of the Trade. Then click on Create New Screen. Click on Edit Filters. Click on Add Filters, go to the search bar, add ROCE. Select ROCE and click on X. Again search, add Net Profit Margin. Again, click on X, enter Free Cash Flow. Select Free Cash Flow. Next, enter Debt to Equity. Click on Add Filters. Now you have got close price option also. Click on edit and delete it. P ratio, click on edit and delete it. So ROCE, click on edit, set to the high, click on update filter. Net profit margin, set to the high, update filter. Free cash flow, set high, update filter. Debt to equity, lower the better. Click on low, update filter. And market cap, let's check for large cap first. So large cap, update filter. Click on apply filters now. You got 7 stocks. You can also click on edit filter and select sector. Which sector you want to select? Maybe financials, energy, consumer staple, communication services, healthcare, information technology, materials. Click on update filter, apply filter. You got 3 stocks which have got ROCE more than 30%. Net profit average is almost 20%. Free cash flow, decent free cash flow. Debt to equity, almost 0. Now let's click on edit filters and check the same for mid cap. Update filter, apply filter. You get 8 stocks out of mid cap segment which are very strong. ROCE, double digit. There is a stock which has got 110 ROCE. Net profit margin, 25%, 18%, 61%. Free cash flow, even that is decent. Debt to equity, almost 0. Now click on edit filters, check the same for small cap, update filter, apply filter. You get 33 stocks which are good in ROCE, you are looking at the number. Net profit margin, which is almost double digit. Average, almost 18 to 19%. Debt to equity, almost 0. By doing this, you got a checklist. So which stocks or which fundamentally strong stocks should I observe? You have got some bunch of stocks in your watch list. So what is the importance of filters that we applied? It is to choose the best. ROCE, return on capital employed. To put it in simple words, when a company spends 1 rupee of its capital and the ROCE is 20%, it means for every 1 rupee invested, the company is gaining 20% return on capital employed. So it is gaining 20 paisa per every rupee. It denotes the profitability. So ROCE should always be high. Next one, net profit margin, as the name itself suggests, profit should be high. And also debt to equity, lower the debt, better. So lower debt. Free cash flow. Company, after clearing all its responsibility and liabilities, it has got this much of cash in its account. So this can be used to expand the business or in business improvement. So free cash flow should be high. Even that is a very important factor. Even profit numbers can be manipulated maybe, but not the free cash flow in the company's balance sheet. So these ratios are very important. If these ratios are justified, then that company is a fundamentally good one. You can consider to study further. So let's come back to the main question, when to enter? See, if there is a sudden drop in a fundamentally strong stock, I have taken an example of ITC. There is a note, the companies which we are discussing in this video, the stock names, these are all for educational purposes and it's not an investment recommendation. ITC, when you consider ITC's case, recently there was a drop in up to 4%, 4 to 5% in ITC's share price because of some news which said there would be tax implemented. There is a proposal of implementation of extra tax on cigarettes, which is the main revenue contributor of ITC company. Of course, it is a conglomerate, but still. So the tax on cigarette thing hit the ITC hard. So if you were thinking of entering for a short term, you would have easily made 4% if you had entered after the drop. Next thing, news. There are many news circulated about the company. Many positive, some negative, which says a new type of business theme is being thought of. They are trying to implement something new. They are trying some experiments. If those news are supportive, the stock price gains momentum. If there are some concerns, stock price takes the hit. In this kind of a situation, you should dive deep into the news and verify if that is right and take investment decision to enter or to abstain from it. The last part is management comment. This is very crucial because this is the official information shared by the company's management. If they are thinking of bringing a competitive product, there is another company which has already bought a competitive product and this company is thinking of tackling that product. They are thinking of implementing a new product to tackle an existing product. Would you like it? Would you support it? If there is a scope for it, definitely you can approve to invest in this company. And also, management comment contains of the challenges, the estimation, the future prospect, what the company is thinking, what the company's thought about that sectoral growth, all that matters. So you have to pay very keen attention to management comment also. Considering all this, you can take a decision when to enter a stock. Only these factors doesn't empower you to take entry into the stock market. There are some other conditions which are very crucial. Those are know about business. What is that business? What is that company doing? Do you understand that business? Do you know what is the demand for such kind of a service or a product in the market? Do you think it would sustain? And do you believe it is futuristic? Depending upon these three factors, if you are willing to learn more, only then you have to enter into any stock. If you are not ready to learn, if you're not ready to invest your time, then don't invest your money. Only when you invest your time after investing your money on research and knowing all about this, only then you can take proper informed decision. If not, you're gambling with your hard-earned money. Never do that. And the next section is two-step factor. There is something called two-step factor which defines about macro factors and micro factors of a sector or a company. Let's consider macro. If there is a change in government policy, if there is something about falling economy, or there are some news about negative GDP numbers, in this case, the stock might get a hit. And also, these factors are not in the control of that company's management or that stock's functioning. These are called macro factors. In this case, if there is any scenario like this, you have to think and understand if there is a change in policy of the government, the changed policy is in which sector. Choose some fundamentally good stocks of that sector. And if there is a falling economic situation and also negative GDP numbers, government is giving a boost to fight back. There are some sectors which government is supporting. Research on that sector, find best companies in that sector and continue. Micro factors. These are purely associated with companies' functioning, companies' attitude, companies' behavior, all that. See, for example, if there is a changing situation in the business sector, or if there is a situation in that sector where the market is expecting a change or adaptation from that company and that company is not doing it. That's a challenge. For example, Nokia. Nokia was a leader in mobile phone space, but it didn't adapt with the smartphone, with Android OS. And look at what Nokia is facing now. It tried to bounce back, but a hard chance. And Mahindra EV. Tata EVs are already in the market, but Mahindra came up with 2 brand EV cars. So it is trying to fight. It is trying to lead the market. So Tata is already a front runner. Mahindra is joining the race. So in this kind of a situation, there is something adaptation happening. Positive adaptation. There was an abstain from adaptation. This is a historical example, but also there are some lessons to learn from it. So understand it. If this kind of a situation arises, you should know what to be done in different cases. And also allegation. If there is any allegation against a company. Recently we have seen Adani. There was an allegation against Adani company for bribery from American institutions. So soon after that, these stocks, Adani company stocks, almost consolidated by more than 25%. If you believed Adani management and you have trust in them, you would have entered in this kind of a situation so that it would have definitely bounced back, there would be a growth and you would have gained. So this kind of a situation you should be aware of, and if you believe that will definitely bounce back, there is an opportunity always. This being said, we come to a very important juncture where we define the saying, invest and forget. Is this always right? No, it is not always right. Because there are many big companies, many strong companies, which gave negative returns in 4 years, 5 years. They remained stagnant. Your capital got locked. In that case, what should be done? Let's practically understand and analyze that kind of a real case scenario. First, let's consider Asian Paints stock. It's a 2.3 lakh crore market capitalization worth company. 8th Jan 2021, the stock price was 2,844 rupees. Now the stock price is 2,409 rupees. Imagine if you had entered in the January of 2021, your capital would have earned you negative returns. So the capital locked. You can't take it back in the losses. What would you do by investing in such a situation? Is there an option or is there a solution to move ahead? I'll discuss about it. The next stock we are discussing is HDFC. Let's consider HDFC. If you had invested on 2021 February 5th, the stock price was 1,597. Consider 1,600. Now the stock price is 1,873. After 4 long years, the returns given by HDFC is not so great. Even if you consider for past 5 years, the returns is 48.2%, maybe 9.5% odd, which is not meeting the expectation that if we invest in stock market, we can get double-digit growth. That's not the case here. And also, consider IRCTC. When you consider IRCTC, 2021 October 14th, the stock price was trading at 1,092 rupees. If you had thought 2020, 2021 and up until 2021 October, the company has given us steady and also growing returns, let's enter this stock now. And if you had entered after 4 long years, your investment would have fetched you negative returns. So what should be done? Let's consider another example and we'll come to the conclusion. The next example is Indian Oil Corporation. The market cap of this company is 2.04 lakh crores. If you had thought of entering this stock for a short term, and let's say you entered this stock by observing 31st Jan 2024 stock price, it was 146 rupees. Within a week, so in just 1 week, the stock gave a return of 30% odd. It rose up to 192 rupees per stock. So if you had thought, yes, this is the bull run and entered after almost 1 year, maybe 10 months, what is the return? The stock price is at 144 rupees. So again, your capital would have got locked in these big names. So what should be done? Very simple. Don't invest and forget. Please invest and monitor. Because if you are entering for a short term, if you think you are investing for short term, maybe 1 year, 2 years, 3 years, then you have to worry about capital getting locked. Because good company, it will definitely grow, but you're waiting and waiting and waiting, 3 to 4 years gone. So that should be a very bad scenario for an investor like you. So if it is for short term, don't let your capital get locked. You can put a stop loss maybe for 5% or 10%. When you find better opportunities, take back your investment and reinvest in that better opportunity. That should be the plan ahead. If you are investing for long term, don't worry. Don't look at the 3 to 4 year return or 5-year return. Invest. If your target or investment horizon is 20 years, don't look at that stock for 20 years. That you can definitely do. But if you are trying to enter into market now, you should be wary of choosing, or you should be capable of choosing futuristic stocks. Because, for example, I'm just giving you as an example, it's not an investment recommendation. If you consider there will be some policy against diesel and petrol usage, and EV takes the front seat for commuting. So EV vehicles, if there is a boom for EV vehicles, there will be a demand for semiconductor chip, there will be a demand for aluminium, there will be a demand for battery stocks. So these kind of stocks you can definitely think of investing in if there is a momentum towards EV space. And if there is a momentum towards green energy, maybe solar energy, solar panel manufacturing companies, that can be your prime focus. So like this, you have to arrange and observe the stock market, policy decisions, companies' management comment, all this, and take a wise decision. I hope you have found some value out of this video. If yes, please hit that like button and do let me know what you think in the comment section. If you want more such videos, please subscribe to our channel and click on that bell icon so that you get notified when a new video is released. And also, if you want to understand in-depth analysis of stock market or mutual funds, there are detailed courses available on Freedom app. So download Freedom app, watch those detailed courses and get your personal finance better. So good luck with your learning. All the very best.